What's up, everybody? It's Johnny, and I'm back today to talk about your taxes. I'm going to review the new tax filing deadline and how to avoid penalties and interest. I know many of you are working from home right now too, so I'm also going to be breaking down the home office tax deduction. Specifically, today's video will be focused solely on your federal income tax return. I'm not going to get into the state returns today, just the federal tax return. I'm talking about your Form 1040 that you file with the IRS. Alright, let's first start with the change in the tax filing deadline. The federal income tax deadline has been extended from April 15th to July 15th. For you to file your federal personal tax return. You have until July 15th to file your personal taxes without an extension. You may file an extension for additional time to file your personal tax return, but that extension must be filed prior to July 15th. If you properly file an extension, the extension extends your time from July 15th until October 15th. Alright, sometimes it's nice to put a visual to the words, so I'm bringing back the whiteboard for this clip. So, the original tax day is usually in mid-April, usually April 15th, but due to everything that's going on, the tax deadline has been extended this year from April 15th, 2020 to July 15th, 2020. So, you have until July 15th to file your taxes or to file an extension. So if you file an extension prior to July 15th, that gives you even more additional time until October 15th to file. So it's always nice to, again, put a visual to the word, so I hope that this breakdown helped you understand your tax filing deadline better. So please note, I'm talking about your federal income tax date. When you file your personal taxes, you typically file two returns, a federal return and then a state return, okay? Please note again that this date may be different for your state. Some states' due dates are not the same and they have different rules on penalties and interest. Some states don't even require you to file a tax return. So to be clear, this video is focused solely on the federal tax deadline and federal tax penalties and interest. Please be sure to contact your own accountant about your specific state and all the rules that apply to your state. Alright, so far at this point in the video, we've broken down when your taxes are due. So now you know your due date, okay? The next phase is you need to know about the penalties that you can face related to your taxes. So there's two types of penalties that I'm going to address today. The first is the failure to file penalty, and the second is the failure to pay penalty. Alright, first, the failure to file penalty applies if you do not file by the tax filing deadline. The penalty for filing late is normally 5% of the unpaid taxes for each month or part of a month that the tax return is late, up to 25% of your unpaid taxes. Penalty starts accruing the day after the tax filing due date. I always suggest filing timely, even if you think you can't pay your taxes. The IRS has options to assist with paying your taxes, such as installment plans. So you do not want to face this failure to file penalty. Make sure that you file your taxes or file an extension by July 15th, 2020. If you file your return more than 60 days after the due date of July 15th, or the extended due date of October 15th, the minimum penalty is $135 or 100% of the unpaid tax. So, if you're expecting a refund on your federal taxes, I personally suggest not waiting a day longer. File your taxes right now to get your money. If you have already filed your tax return and you are not sure where your refund is, I will put a link in the description below to help you find it. Okay, now, if you owe tax, payment will be due by July 15th, 2020. This is where we need to understand the second penalty, the failure to pay penalty. The failure to pay penalty applies if you do not pay your taxes by the deadline which is now July 15th. You will face a penalty of half of 1% of your unpaid taxes, and the penalty applies for each month or part of a month after the due date and starts accruing the day after the tax filing due date. And it's important to note, even if you file an extension, taxes are due July 15th. If you filed an extension prior to July 15th and paid at least 90% of the taxes you owed with the extension, you may not face a failure to pay penalty. The remaining balance would be due by October 15th. And again, it's a common misconception that if you file an extension, that your taxes aren't due until October 15th. Your taxes are due by July 15th, or based on what I just said, you want to pay in at least 90% so that you can pay the remaining balance by October 15th. If you find yourself in a situation where you are subject to the failure to file penalty and the failure to pay penalty, the maximum monthly penalty you will pay per month for both is 5%. And you may not have to pay any penalties at all if you can show reasonable cause for not filing or paying on time. Okay, at this point in the video, you now know when the due date is to file and how to avoid penalties. Next, let's look into ways to possibly reduce the tax amount due. I know many people are working from home right now, so let's dive into the home office tax deduction. I'm going to start with a simple rule. If you are an employee, you cannot claim a deduction for home office expenses. Just to clarify, you are an employee for tax purposes if you receive a Form W-2. If you are unsure if you receive a Form W-2, take a look at your last paycheck. Okay? If you see a big number at the top, your gross, that you're probably happy with, and then after that you see deductions for Social Security, Medicare, federal withholding, state withholding, other withholdings, and then a smaller number at the bottom that you actually receive, which you're probably not as happy about, you're an employee. If you are self-employed, an independent contractor, or a freelancer, chances are that you will qualify for a home office deduction. If you qualify, here are some really important things to know. You report the home office deduction on what's called a Federal Form 8829, which is filed on your Schedule C of your personal tax return. To qualify, the part of your home you are using must be used exclusively and regularly for trade or business. So basically, it must be your actual office and not just a spot at your home for convenience. It must be a space that is used solely for your business. As far as the deduction amount goes, the first rule is to take the square footage of your space. Let's say, for an easy example, 100 square feet is your home office space. And then the total square footage of your home. So let's say that's 1,000 square feet. So your space is 100 square feet and your house is 1,000 square feet. That's 10%. Your space is 10% of your home. So therefore, 10% of your costs, like your insurance, your taxes, and your mortgage interest, would be deducted on your Schedule C of your personal tax return. Also important to note is that since 2013, there is another option. It's called the simplified option for the home office deduction, which is just simply $5 per square foot up to a maximum of 300 square feet for your home office space. So if we use that example that I just used, the square footage of the home office space was 100 square feet. So you would take 100 square feet times $5, which would be $500 as a home office deduction. As always, the home office deduction and any other tax deduction that I refer to in these videos is specific to each individual. So please be sure to contact your accountant about these types of deductions when filing your taxes. Alright guys, this brings us to the end of this video. I hope you all found this information to be very helpful. Please subscribe if you like what you saw. Click that subscribe button. I hope you stay healthy, I hope you stay sane, and I cannot wait to see you all soon.